Hello everyone, in this video you're going to see how to compute the gross taxable income of Mrs. G under the head income from other sources. So now in this problem I have given two cases. It says that when Mrs. G maintains the book of accounts on cash basis and when she maintains the books of accounts on mercantile system. So now if you have to maintain the books of account on cash basis, then only the actual cash received and the actual cash payment during the current year will be recorded. But in the case of mercantile system, this is what we have done in financial accounting and also in corporate accounting. So whatever it's related to the current financial year or current previous year, both expenses and income, whether it has been received or not, whether it has been paid or not, as long as it is related to the current previous year or the current financial year, it has to be recorded in the books of accounts. So now let us look at the various investment made by Mrs. G. The first one is 98,000 12% securities of the Uttarakhand government, then 80,000 9% less tax non-listed debenture of HL Limited. Then interest in both the cases is payable on November 1st every year. So it means that interest is payable once in a year. Then on September 1st, 2019, Mrs. G borrowed rupees 40,000 at 10% per annum and invested in purchasing rupees 40,000 9.5% securities of the Kerala government. So the date of interest or the due date of interest for this particular security is February 28 every year. So now in this case, you have to listen here carefully. In this case, the investment made in Kerala government security is on 1st September 2019 because you bought it from the bank. Then since no date has been given, it will be assumed that the investment has been made on the same date in which the loan has been borrowed. So the investment has been purchased on September 1st 2019 and the due date of interest is February 28 every year. So now listen here carefully. We need not calculate the interest on time basis. Remember, in income tax we don't calculate the interest on time basis. It doesn't mean that we calculate interest from 1st September 2019 then till 31st March 2020. That is not the case. So here with regards to tax, if you have to calculate the interest, we have to check the due date of interest. So now here in this case the investment has been purchased prior to the due date of interest. That is, it has been purchased on 1st September 2019 and the due date of interest will be February 28 every year. So it means that the due date of interest under this case will be February 28 2020. So if an investment has been made prior to the due date of interest, remember it will not be calculated on time basis but on how many times the interest has been paid. So here in this case, under this particular security, the interest is paid once in a year and the investment has been purchased prior to the due date of interest. So it means that the interest will be calculated for one full year. Now, if you look at the third paragraph, it says interest due on February 28, 2020 is received on April 12, 2020. So now this is another important point that you have to note it down. So remember, the interest, although it's payable or it's due on 28, 2020, but the interest has been received on April 12, 2020. So since we have to calculate under both cash basis and mercantile system, then for the first case, since the interest has been received after 31st March 2020, that is the end of the previous year. So under cash basis, it will not be recorded because under cash basis, only if the actual cash has been received or the actual payment has been done, then it has to be recorded. But in the case of mercantile system, it is due on February 28. So on the mercantile system, since it is related to the current previous year or the current financial year, whether it has been received or not received, it has to be recorded in the books of accounts. Now, if you look at a solution, so there is a two column for the calculation of interest. So the first one is interest on security is taxable on receipt basis, that is cash basis, and the interest on security is taxable on due basis. Remember, under receipt basis, only if the actual cash has been received or only if the actual payment has been made in cash will be recorded. But under the due basis, whatever it's related to the current previous year or current financial year, it has to be recorded whether it has been received or not, whether payment has been made or not. But as long as it is related to the current financial year, it has to be recorded. Now for the first two cases, that is 98% or 98,000 12% security of the Uttarakhand government, so it'll be assumed that it has been received on the due date of interest. So that is so you'll get the amount there 11,760 for both the cases. Then for rupees 80,000 9% less tax non-listed debenture of HL Limited, that also be assumed that it has been received during the year. So 7,200 for both the cases. And remember, since it is a less tax non-listed debenture, So if the face value of the debenture has been given, then there's no need to gross it up. I'll repeat, since it is a less tax non-listed debenture. So if the face value of the debenture has been given and the interest the percentage of interest has been given, then there's no need to gross up. So you can simply calculate the gross interest for 9% of rupees 80,000. Then here in this case, he has also invested the amount of rupees 40,000 which he has taken as a loan from the bank to invest in the security of Kerala government. So it is rupees 40,000. Then the rate of interest is 9.5. So in this case, again, I'll repeat. If you look from the problem, the interest has been received on April 12, 2020. So on the cash basis, unless and until the actual cash has been received, it will be recorded. So under the first case, it will not be recorded because the actual cash has been received at the after the current previous year. But in the accrued basis, since it is related to the current financial year or the current previous year, it has to be recorded. So 9.5% of rupees 40,000 will be 3,800. Then let me repeat it here again. Remember, in income tax, we don't calculate the interest on time basis, but we have to look at the due date of interest. So the investment has been made prior to the due date of interest, and the interest is paid once in a year. So the interest will be calculated for one full year. Then you will see that the gross interest, after adding up, the gross interest under the first case will be 18,960, and under the second case will be 22,760. Then deduction of interest on loan taken. So remember, for the first case, again let us look at the problem. For the first case, we know that the interest on loan taken from 1/9/2019 to March 31st, 2020 has been paid on 1/7/2020. So remember, the interest on loan has been paid after the current previous year. So under the cash basis, as I've told you, it will be recorded only if the actual payment has been made. But under accrual basis, since it is related to the current previous year, okay, or the current financial, it has to be recorded. So that is why under the first case, it is not allowed because the actual payment has not been made. So it will be nil regarding the interest on loan taken. But under the second case, it is accrual basis, whether you have paid it or not. If it is related to the current financial year or the current previous year, it has to be recorded. So that's why in case B, that is on due basis, the interest on loan is 2,333. So the income from interest on security or the income from other sources under the first case is 18,960, and under the second case it's 20,427.